Hello and welcome to this week's episode for Conservative ETF Investor. My name is Ken. I will be your host today to go over last week's action in the stock market. Today's date is July 9th, 2017, and here we are on the home page of Conservative ETF Investor. Once this video is done, I'll have a link for it here on the home page, so you can click on it right there. Scrolling down, you see our current ETF recommendations. Our current posture for all of our recommendations is still a hold bias. So we are still on hold for all of our ETFs. And when you are on the website, you can come over here to our portfolio ideas so you can see what our ETFs are that we track. We track 7 ETFs based over 5 different markets, and you can see our percentage allocations right over here. So it tells you exactly what our recommended portfolio is. Now in the recommended portfolio, we do have 20-year Treasury bonds for our bond portion of the portfolio under symbol TLT, and the recommended allocation is 25%. Although we do recommend that you buy bonds directly as a bond rather than a bond fund, so you don't have the volatility of a bond fund. Now, our portfolio has done year to date 2017, our portfolio was up 13.5%. And since our buy recommendations, oops, did I do that wrong? I believe I did. Give me 1 second. I want to get the since inception here. Is that, let me see which one. Actually, this is the one that I want right here. Hang on 1 second and let that open up. Okay, year to date is 6.37% total gain for the portfolio, and since the buy recommendations, it's up 13.5%. So that does it for that information, and now we are going to jump right into our charts. Again, we track 7 ETFs, and we're going to start with the S&P 500. The S&P 500 was pretty much a flat week, as you can see right here. What I do is I use the weekly charts based over a 5-year time horizon. I use the stockcharts.com charting software. I'm a member there, and that's where I put my charts in here so I can keep them and download them and do all sorts of things with them. And you can see our buy recommendation is right here. And we are currently still trading in an upward trading wedge formation. You can see that over the past few weeks we have hit a top, and over the past couple of weeks we've come down. So the market is softening up. I have 2 moving averages in here, which is the 17-week and the 34-week exponential moving average. And we haven't even crossed below the faster of the 2 moving averages. Now down below here is our momentum indicators. I have 2 momentum indicators here, and then this is when the dividends get paid out. The momentum indicators that on the top one here is the MACD, that's moving average convergence divergence at default settings. We've reached a top peak here and has since softened up and has been trading flat. Right now, we are below the signal line, which is bearish, and we are in a high territory here, so we should see this begin to soften up. That doesn't mean that the price has to soften up, but the MACD should begin to soften up and come down. Another thing is the other momentum indicator that we have here, slow stochastics. We are above 80 but below the signal line. Above 80 is bullish, below the signal line right there, you can see it in the thumbnail as well, is bearish. So we've got a mixed reading here. You've got a softening signal here. I get the impression that we're going to come down and test this lower trend line right here. The S&P has held up extremely well. Okay, let's move on to the next one. The next one is, our next ETF that we follow is QQQ is the symbol. This is the technology. So this is basically the NASDAQ 100. Same thing, had a flat week, 0.09% for the week. And here, the NASDAQ 100 was so strong, it was trading in an upward trading wedge like the S&P, but it broke out right there. You can see that breakout, nice and clean, stayed up above it, but it has since softened up, and you can see as of this week has come down, touched. Let me try to fix my mic so I can stop all that puffing sound. It has since come down, touched that upper support line. It was a resistance line, but now, which once acts as resistance, once it breaks through, it now acts as support. And yes, it did act as support. And that is right at the 17-week EMA average as well. You can see that right there. And you can see it very clearly here in the thumbnail. You can see we came down, kissed it, came back up. Now we have a hammer candlestick. And the hammer candlestick is presenting itself after we've been in a downward trend over a few weeks. This is showing that prior to this point, the bears were in control that drove the ETF price down. Here, the bears tried to take control, but the bulls came back, recovered, and since pushed that price of that ETF out. So that looks like it's a bottom that's in place right now. Yeah, it looks like we're going to come back up and potentially come up to this high right here, or this high right here. And then we'll see what happens at that point in time, if that will be a continuation pattern, if we begin to soften up. The MACD on our momentum indicator has topped, been traveling down ever since, and is currently below its signal line. The slow stochastics is below 80 and below its signal line, but you can see that it looks like its momentum is clearly softened. And if we see a bounce in this price and this begins to come back up here and go to the 142 or 143 level, you will see that slow stochastics cross that signal line and come back up. And it appears as if that is going to happen. My interpretation is that there is strength here in the Nasdaq, although it's been the weakest. It's been a weak a weak index. I do believe that it's going to have a bounce in here, and then at that point in time, it potentially could come back down and then penetrate this, or depending upon what happens with the market, come back up. We are in the summer doldrums now, so it could come back up, do a retest of the highs, and then come back down, and then fall back in between this trading channel, and then come back and hit this lower trading channel. And just for the sake of argument, let's go to an inspect mode. If we do that, we're going to come up, oh, let's just say 2 to 3%. And then if we do that, and we come back down to this lower channel, that would be a drop of about 12%. That'd be in correction territory, excuse me, because we'd be below 10%. Okay, let me take that off of inspect, and we are going to go over here, and we are going to go to our next chart, which is IWM. IWM is the Russell 2000 small cap stocks, symbol IWM, traded on the New York Stock Exchange. Look at that, had a flat week. Now, here the ETF was trading an upward trading channel. It's been hugging and kissing this support line or lower end of the trading channel for quite some time, and it's just holding right in there. It's holding that support and going up. Meanwhile, because we've had a lot of sideways movement action in here, the MACD has topped and has since softened up. So during this sideways movement, you've had the MACD come down from its high elevated level to a level of 2.5, which takes it to a point where it can kind of go either way. I mean, it's still up there, but this ETF can still go up higher. The MACD is still below its signal line and running parallel to it. The slow stochastics is technically higher than the signal line, which is bullish. And you can see a little dip in there. You can see where it kind of came down and then showed strength and then came back up, and it just crossed above 80. So bullish and bullish on those two counts. So that's it. Again, we're at hold recommendations for everything. So we are still, from our buy posture, we're still recommending a hold posture. And that's it for IWM. Let's move on to the next one. The next one is VEU. We believe in a completely diversified portfolio. We don't put all of our eggs in one basket, and that is why we have complete diversification over our 7 ETFs. Now, this particular ETF, the symbol is VEU, traded by our favorite family of mutual fund companies, which is called Vanguard. This particular ETF is the all-world, excluding the United States ETF, traded on the New York Stock Exchange. It had a down week, lost 0.46%. Here is the trading action on the ETF. You can see that we had a declining tops trend line. We broke up above it, and then we have since stayed above it, and it is holding and moving sideways. For the momentum indicators, the MACD, hold on one second, I'm moving some stuff around here by accident. Let me just get that a little bit better. The MACD has since topped, came down, and technically is below its signal line. It just crossed below its signal line, which is a bearish action. This is happening in kind of high territory for this particular ETF as well. The slow stochastics is above 80. And it is below its signal line. So bullish above 80, bearish below its signal line. But the price action is just simply moving sideways. And it looks like it's holding support. There's two support levels here. This here was a rising trend channel, a rising wedge that we were trading in. It broke up above the rising wedge pattern, and so at one point this was a resistance line. Now it's trading above that. That's a support line. So that's a first line of support. Second line of support is this tops line right here. You have one peak here and one peak right there. That's also acting as a support line. So so far so good, and we are still holding this ETF. Moving on to our next ETF. TLT. What a tumultuous week bonds have had. Actually, the past 2 weeks. Okay, this is symbol TLT. These are 20-year Treasury bonds, ETF, traded on the NASDAQ Stock Exchange. We had a nice negative down week of down 1.72%. Let me take you over here to the thumbnail. See these two red bars? That's this week and last week. So since the previous week, the bulls tried to take control of TLT. There's a resistance line in here I put in from this tops line right there, and it looked like it was going to show some tops. Never quite made it to that point before turning tail and coming down. This is a declining tops trend line that I have here, which was a resistance line, but now that it's above it, it is a support line. I have an expectation that we are going to see a bounce in TLT over the next 1 to 2 weeks. I'm going to go to inspect mode, and I want to show you something here. Where, if you look at my line, how I'm evened up right now with the bottom of this point right here where the ETF is currently trading. It currently closed at 122.72, right? So if I take this and I put it at 122.72 or close to that amount, hang on a second, I'll try to get right on it. It's a little touchy right there. All right, so let's say right there. Now you'll notice the support that we're going to come into play here. See right here? That is where we reached a peak and it came back down. Well, that was a resistance point, but now that we're above that, that is a support point. You have support here, here, here. There's support all over the place here. and you have a declining tops trend line, which we are above it now, which is also going to act as a support line, and we are very close to that point there. So your risk reward ratio from my perspective is that we're going to see a bounce and then come back up and possibly test that high, which is 4.87% higher. Well, if from where we are right now, that's approximately, hang on if I can get you the exact number there. It's approximately 3.88%, or around that number there. It could be about 4, it's about 4%, okay? I'm looking for a 4% bounce in TLT from our current levels. That's my expectation. Of course, the ETF can do whatever it wants to do, break down below this, all the support level that you have right here, break down below this rising tops support line, and then come back down over to here, or down to this ultimate support line, which is way down over here. From our current position, that would be a drop of 5.43%. I don't expect that to happen. I have an expectation of a bounce, but that's my opinion, not fact by any means. We will see what happens. Our recommendation on the portfolio on our conservative ETF investor, let's go to our current recommendations page, and you can see as of 7/9/17, which is today's date, we have on TLT a current posture is hold. We're hold across the board, but just for clarity, I'm explaining that I have a hold posture on TLT right here. So we rode this down and we expect to ride at least some or all of it back up. We will see how this plays out. That's on TLT. Let's move on to our next ETF, which is Vanguard REIT right there. This is our real estate portfolio, position of the portfolio. Symbol is VNQ. This is the Vanguard Real Estate Investment Trust ETF trading on the New York Stock Exchange. Had a negative week, down 1.48%. You can see this trading pattern that we've been in over the past, since 2017. It's gone up, down, up, and guess what? Now it's coming down. So it looks like we're going to come down. There was a declining top support line here. We've broken down below that. It appears as at this point in time that we're going to come down and test this again, test the support level in the 79.50 range or whatever that is. So it appears as if we're going to come down and test that again. You can see, similar to TLT, VNQ had 2 negative weeks right there. Now, you can see the up and down in the MACD. Currently, it's above its signal line, but clearly heading south, ready to cross below it. And if indeed we do come down to test the support line, that will absolutely happen. You'll cross below that signal line. The slow stochastics is below 80 and below its signal line, bearish, giving further credence towards coming down and testing that support line right there. Okay, so that's it for VNQ. Let's move on to GLD. What a week GLD had. Look at this. All right, so this is symbol GLD. Weekly chart again, 5-year time horizon. We use the same chart patterns, same charts for all of our ETFs. Negative week, down 2.32% for the week. Look at the gap down. Let me take it over here to the thumbnail. You can clearly see that large gap down that we had. Now, look where the ETF is currently trading at. It's trading at a pretty good support level. We've had support going back since 2013 on this particular price level. My expectation is we're going to have a bounce here and we're going to come back up at least into this declining tops trend line, which is currently a resistance line because we're trading below it, okay? So let me go over to the inspect mode and let that populate. Come on, computer. Let's go. Come on, update. Let's see if I have it now. I do. So where we're at now, I'm expecting at least a 3 to a 3.5% bounce up. That would be my expectation. Of course, I could be completely wrong, and we could blow through this support level and come back down to this other support level, which is currently approximately 2.5% lower than we're at now. That's on this support line here of these bottoms. This is a rising support level line. And then of course it could blow through that and come down to this next one, which is at 107.39 and so forth. But my opinion is that we're going to see a bounce in GLD and we're going to come back up. It also left a gap there. I would like to close that gap, so at least come up to this lower gap line here. And we'll see what happens with that. Looking at our momentum indicators, we are traveling down on the MACD as well as the slow stochastic. So from the momentum indicators point of view, we are definitely not looking good. But like I said, I'm expecting a bounce. That's my interpretation of how I'm reading the charts. Now that does it for our last ETF. Now we have two more charts I want to show you. The first one is the VIX. The VIX is the volatility indicator for basically the NYSE, New York Stock Exchange, or the S&P 500. And you can see the symbol right there. And this chart is different now. Now we use a 1-year chart on daily bars. On the last, all the other charts that I showed you, each one of these candlesticks was representative of 1 week. Now, on the VIX, each one of these candlesticks represents 1 trading day. Now, on this particular index, we are still in a bullish posture because I have 2 moving averages here. I've got a 50-day exponential moving average and a 200-day. The red faster moving average is, the blue faster moving average is below the red, and the ETF is bouncing around, but it's very close to the faster of the 2 moving averages. So this is still in a bullish posture for the volatility indicator, indicating that the S&P 500 has still got some strength left into it. Now, moving over to the next one, this is the symbol VXN. So this is the volatility index traded on the, labeled on the Chicago Board Options Exchange NASDAQ 100. So basically, this is the volatility indicator or index of the NASDAQ 100. Now, this one is showing different signs than the S&P 500. This one, the faster moving average, the 50-day is above the 200-day. This is, by the way, this is an inverse indicator. As this goes up, the price of the ETF goes down. So down below here, you can see I've got the NASDAQ 100 ETF symbol QQQ, where you can see where it is topped and has since softened. Well, during that time frame, the VXN has bottomed and has been rising because it works inverse of the price. So as this goes up, your long position goes down. Now on the MACD, we've topped and we are heading down, getting ready to cross below its signal line, which is bullish for the NASDAQ 100 stocks, if indeed that does happen. It's reached top. If it gets below the signal line, it presents more credence that the price of the NASDAQ 100, is bottomed and is going to come back up, possibly to this level or to this level here. So those are all of our indicators, all of our charts and everything like that. Again, my name is Ken, and I've been your host for today's stock market update for the previous week. Please join us at Conservative ETF Investor, where you can get all this information, and click on the link once this is uploaded. Thank you very much for watching.